Hello and welcome to InvestFlow. Today we'll be talking about Upstart, a company which just IPO'd at the end of 2020. Since then they had one of the most meteoric rises probably ever in the stock market. But I feel like most people don't actually know what the company does, so let's get into that.
Well, Upstart's up about 25% just in 4 days. That's a good looking name. Very powerful, very strong earnings. These stocks are
What do they do?
really
I don't even know them. What do they do?
Excuse me?
What does Upstart do?
Well, I'm sorry.
What kind of company is it?
Yeah, I'm not. You're breaking up.
Upstart, ticker symbol UPST, currently has a market cap of around $11 billion. They only employ around 500 employees and were founded in 2012. The headquarters is in San Mateo and they are working in the fintech and lending space. The CEO is Dave Girard since 2012. If we take a look at the chart for Upstart, we can see that since the IPO at the end of 2020, it had a meteoric rise. It went public around $40, and at the peak, these are monthly closes, so I think the peak was even higher. At the peak, it was around $300 or $400, so it went up around 1000%. Since then, since the growth sector started correcting and even crashing around November, the stock gave up a lot of its profits, and now it's down to around $130 again. If we take a look at the owner structure, we can see a lot of interesting things. First of all, the CEO, Dave Girard, has around 13% of the shares outstanding. There are also several other famous investors which I think all got in before the IPO in venture capital funding. These include Rakuten and also Third Point, the venture capital firm of David Loeb. And there were also other quite famous people who invested early in the company, like Salesforce founder Mark Benioff. If we now take a look at the analyst ratings, we can see that there are a lot of different opinions on the stock. There are 6 analysts rating it as a buy or an overweight, 3 people have it as a hold, and 1 has it as a reduce. The lowest price target here is minus 18%, and the highest price target is around 220% upside. So let's take a look at the business model of Upstart. Upstart is a leading AI lending platform with scale, rapid growth and profits. They have a two-sided business which connects consumers to AI-enabled bank partners. Their growth is driven by continual improvement of the AI models. Around 67% of loans are instantly approved and fully automated, so there's not a lot of human interaction needed here. 92% of the revenue is fees from banks or servicing with no credit exposure. And they are already GAAP net income profitable. So basically they have an AI model that does risk analysis and helps to better analyze the risk for banks and other lending platforms, so that the consumer has lower fees to pay and the bank has lower risk. So basically this is a win-win situation for everybody, and especially since most of it is already automated, it is also a very scalable business model. We take a look at the development of the amount of dealers that are using the platform. We can see that the amount has skyrocketed over the last year, going from 91 to over 290 dealers. Which also has to be considered is that currently Upstart only has 7 bank partners, so there is a lot of concentration in just a few clients here. So always keep that in mind. If one of these big banks decides to change the system and not use the Upstart AI platform anymore, that could seriously impact the revenue. So let's take a look at what Upstart is offering to their customers. They claim to have helped more than 1.7 million different customers. They help you to get loans in very different segments. For example, it can help you pay off your credit cards. You can also consolidate debt. You can refinance your car, or you can use some of their other services. They claim that they have smarter rates, so for personal loans the rates are around 10% lower than traditional lenders are offering. The process is easy and transparent, and you can get your rates checked in a matter of minutes since it's just AI based and for the most part, and there are not many people involved. Probably just if some case isn't clear and has to be escalated. There is also no prepayment penalty, so you may pay off parts or all of the loan at one time for no fees. So basically, the whole concept is to get people to have an easier time handling all these things and to have less restrictions and just general an easier time. After we took a look at the benefits for consumers, we also have to take a look at the other part of the platform, which is the lenders. The all-digital lending platform is enabled by AI, and it should grow the consumer loan portfolio, the approval of more borrowers at a faster rate, and provide an exceptional digital experience for lenders. They are claiming that 75% fewer defaults are happening at the same approval rates. They are claiming that during the COVID-19 pandemic, their system is around 5 times more accurate than the normal credit score rating. And they have a net promoter score of 81 compared to less than 30 NPS at most top tier banks. And net promoter score of 81 is really good, and that's one of the highest ratings I've probably ever seen for any services out there. Upstart is offering its lenders several different features, like the Upstart referral network, where you can build a profitable portfolio of personal and auto refinance loans via their referral network. They're also offering the personal lending platform, the auto refinance platform, and also the credit decision AI, which helps you make better decisions, not just based on the normal credit score, but on their AI rating. The third piece of the puzzle, of course, are the dealers, because consumers and banks need to find together somehow, which is, for example, with auto loans done through the dealership. The dealers will get one integrated platform, which they can add to their existing infrastructure. So, for example, they can just integrate it beside their other tools like their CRM system. They offer a online digital retailing platform to engage customers with a modern and innovative digital platform to offer a start-to-finish experience that allows customers to complete their deal online and pick up where they left off in their showroom. Once again, here's the emphasis on increasing the efficiency and increasing the flexibility to remove hurdles and to generally just make the whole experience easier. So they are aiming to have the end-to-end transaction able to be done digitally, online, or in the store of the dealership itself. So in general, the Upstart platform should enable dealers to maximize their loan profits due to the more effective platform they made with their AI-powered lending platform. If we take a look at the total addressable market they are operating in, you can see that it's just gigantic. Just the personal loan business is around 81 billion estimated. The auto loan business is even significantly bigger with around 670 billion, and the mortgage the mortgage market is around 4.5 trillion. So the total addressable market is over $5 trillion. So if they can just get a small fraction of this whole market to operate under their platform, there is just so much opportunity still left here. Another very important part of the business is the amount of fully automated loans, because the real magic in this business model is the scalability and the automation. Because the best AI doesn't really help much if for every single loan a human still has to sit there and approve it. So you can see that the rate of fully automated loans keeps increasing, with a small bump at the start of the pandemic, well, when of course a lot of the metrics had to be readjusted, but this already came back to the pre-levels. In the most recent quarter, this metric sunk a bit though, so investors should keep this in mind and that this number keeps going up from this plateau here. But 71% or the 67% they had in the last quarter is already a pretty good amount. But in the future, they should be able to scale it even higher to increase the efficiency of the platform even more. Before I continue with the video, I would ask you to thumbs up the video and subscribe to the channel if you liked it. Also, make sure to post a comment if you have any questions or just want to maybe state your opinion about the company. Also, if you want, you can follow me on Twitter under @stonkmetal. So let's take a look at the last full year results, and they are truly incredible. The revenue has increased by over 260%, going from around 230 million all the way up to 850 million. The net income increased a staggering 2150%, but that is coming from a low base, so don't take the percentages too direct. It increased from around 6 million to 135 million. The EBIT looks quite similar. The equity increased by around 177% to around 800 million. The equity ratio decreased though, because the other parts of the businesses are just growing way quicker. The return on equity is a very decent 16.8%. Not great, but for such a young business, this is a great value. Looking at the last quarter, we can see that it looks pretty much the same as the full year numbers. Everything is increasing rapidly, everything is growing, bottom line and also top line. So good things to see here. On the valuation, we can see that they didn't have a PE ratio in 2020. Now they have a PE ratio of around 92. The price to sales ratio increased a lot from 3 to around 13. But that of course is because of the rapid increase of share price. Even after the big crash, it still is up a few times, like 4x or something. The price to book ratio increased a bit to around 13.6. The price to cash flow ratio also increased to 65. The PEG ratio, so price earnings growth ratio, is a very decent 1.5. And the Petrovsky S-score decreased from the perfect 9 out of 9 they had in 2020 to still a good 6 out of 9. Looking at the last quarter, we can see that it looks pretty much the same as the full year numbers. Everything is increasing rapidly, everything is growing, bottom line and also top line. So good things to see here. Upstart currently doesn't have financial debt. They have a net cash position of around 500 million. The debt to equity ratio is 126, with 1 billion of liabilities and 800 million of equity. This still is decent under our guideline of around 200%. Analysts are predicting Upstart to keep growing at a rapid pace, although not as rapid as in 2021, obviously. They are expecting the operating margin and the net income margin to decrease over the next few years from around 16.6 to 13% and 16% to 10.8% for operating and net income margin respectively. So let's summarize Upstart. They have very high growth rates in the past and also going forward. They have a good margin, especially for such a young and still fast growing business. They have a good future outlook with a very large total addressable market. On the other hand though, they are in a very competitive market. The TAM of around 5 trillion has a lot of different people operating in it, so they need to stand out, which I think they're doing a decent job at. They still have a high valuation, and they have a very high customer concentration with all the revenue coming from 7 bank lending partners pretty much. So in case one of these partners jumps off and decides to use another platform, that will significantly impact their growth and could even lead to declines in revenue in extreme cases. So that's something to keep in mind. Take a look at the Moat. I think that the technology is pretty good, but keep in mind that this is very hard or pretty much impossible for outstanders to really judge, because like at the end this is a black box AI system that's operating, and from the statistics it's looking to be pretty good at what it's doing, but you can't really understand it too well from the outside, so keep that in mind. The brand is pretty decent, but not great yet. They have great net promoter scores, but they need to get more traction to go up here, for me, in my opinion. From the experience side, they are also around the middle. They have been operating for a few years, but they are competing with lenders that have been doing this for decades, for many decades. So let's finalize this video with my outlook for the company. They have very high growth rates. They have high shareholdings by the CEO and famous investors like Daniel Leb with 3 Point. They have a very innovative business model which could disrupt the whole lending space. They have strong margins for such a young business. They have an easy to scale business model, but they also have high competition in the sector and a lot of concentration in their revenue. I think they have price potential and that the stock could see more substantial and also sustainable upside. Not like this time where the stock skyrocketed at 1000% and then crashed 70%. So yeah, I think the future could be bright for Upstart. So definitely a company I would consider keeping on a watch list or even buy. So I hope you liked the video, and if you did, please make sure to like the video, subscribe to the channel and leave a comment down below. See you next time.